Good morning, everybody. It's Monday, August 25th, the last Monday of August. Where did the summer go? It feels like fall in Chicago with temperatures that are near to below normal. And honestly, it's a little welcomed. I was getting a little sick of the heat as it was going forward. But that being said, as you look at the markets here this morning, everything's a little bit higher. The market's still looking at the Pro Farmer Tour. That Pro Farmer Tour came out with a corn yield that was well under expectations and well under what the statistical data would show in the 7 states. I always look at Pro Farmer, and I do think they do a great job of surveying in those 7 states. They give us a lot of data. I appreciate it very, very much, but I think where I always have diverged with Pro Farmer has been on the final estimates that comes out for the United States, both on corn and soybeans. 53 bushels an acre on soybeans was their estimate, 182.7 on corn. And again, if you look at just the 7 state data, they would be low by at least 3 to 4 bushels on corn. And on soybean, pod counts were record large. So how can you come up with a 53 yield estimate? So Ben, I'll leave that with you. But in my mind, the market should form a high by Tuesday morning. We could see a drop in crop conditions later today, but I do believe a lot of this buying tied to Pro Farmer and the fund short covering that we're seeing will be over with. This is not a rally to chase. Turning it over to you, Ben.
Yeah, I think that's right. Not terribly shocking to see what's happening in the markets. You get the Pro Farmer number; it is lower than expected, and you add a little bit of premium. I think to your point, yeah, we plug in the 7 state data into our grids that we look at pretty often. You get probably a national yield somewhere a little north of 186. Pro Farmer came out 182.7, so again lower than expected. Some of this has to be built in, though. Even the Pro Farmer final national estimate is almost always too low, so you got to kind of build that into your models or your analysis. And too low by relative to the September report by 4 to 6 bushels an acre. That is not uncommon. So I think the debate will rage on over what final U.S. corn yield is, even having the Pro Farmer Tour come and gone. But again, I think the most likely scenario is that you get a yield 186 or better. That's kind of what we show. And even the Pro Farmer number that we got nationally, the 182.7, does fit within the long-term history or our long-term model when we put both of them together, at least relative to the September NASS report. Maybe it's a little high, but again, I think most likely we've got to be prepared for NASS, maybe trimming national yield by 1 or 2 bushels an acre. And so is that compelling evidence enough, I think, is the question this week, as you've gotten this bounce in the market. Is it compelling evidence to support an outright trend change in the grain markets, especially over the next 60 or 90 days? And I guess what we've determined after digesting everything, the 7 state yields, the pod counts, the ear counts, I don't think it is compelling enough to change much. It's still getting a 16.5 billion bushel crop at minimum, I think, in the U.S. Having to sort out those supplies, just kind of think about how the cash markets work. Fast forward 60 days, and what do things look like? Does it look a lot different than it did even Thursday evening before the Pro Farmer Tours were available? So again, it's going to be a really big corn yield. It's going to be a record. We can all debate where that final yield comes in within a range of, let's call it 185.5 and 188, something like that. It's and we do have to say hyper-focused, but I think beyond the September crop report, we'll kind of turn our attention to something else. Most likely demand, China. Will China buy U.S. soybeans? I also think finishing weather could look a little better than we thought maybe 5-7 days ago. So on the left, you've got gauge and measured rainfall over the weekend. So since Friday, dry, of course, most areas, but not all areas. Some key areas of South Dakota, western Iowa, eastern Nebraska did see I think pretty decent rain relative to crop water demands, which of course are retreating pretty quickly. And then temperatures, just a very, very pleasant weekend. It does feel like the middle of September, not the end of August. That temperature pattern will persist, maybe indefinitely. And so I think also, very little risk of frost. And then we'll start to pay less attention to weather, I think, or at least temperatures after the next 2 weeks. Thinking about in the background too, crops in the Dakotas, Minnesota, planted on time, developing normally. I don't think we're going to see much in the way of, frost risk, whatsoever. And I think too, increasingly, we've kind of highlighted this, what's next? And so one, I think we do have pretty decent rain totals, and this has been very, very consistent, both the 1 to 7 day forecast on the left here and the 8 to 14 day forecast on the right. No drought, I think, whatsoever come hard red winter planting in the next 30 days. So abundant soil moisture there. That's been something that's been fairly rare over the last decade, but you've got a lot of water incoming this week in places like Kansas, Oklahoma, Colorado, the Texas Panhandle. Now on the right, you do see this general trend in humidity levels. So the jet stream does change its path and its mean position. The devil will be in the details, of course, but you've got pretty good agreement today that September 1st and 6th. So we will see in some places a lot better rain chances in the southern Midwest, east of Mississippi. So most likely, given the consensus weather forecast today, I think some crop finishing rains do lie on the horizon in that first week of September. And then something that has jumped out to me, at least, again, and we've highlighted this a couple of times in the last week or so, is Southern Hemisphere forecast, which forecasts, if we just isolate for now wheat in Argentina, southern Brazil, Australia, those forecasts look really good. For a long time, people have been expecting those regions to be wet during the northern hemisphere autumn, and then that is coming to fruition. Last week it rained up to 2 to 4 inches in a lot of Argentina. This is the 10-day forecast you see here, and so yet more rain in some pretty key crop areas of Argentina, eastern Paraguay, southern Brazil. So I still think, again, looking forward, we probably kick off the South American planting season, which technically begins the last week of September, without any major dire water issues. And then we can't yet pull up operational models yet, but the long-term weekly guidance does look pretty wet in central and northern Brazil, come September 10th onward. So, do you have planting delays in Brazil like you had last year? Maybe you don't. So we've all got to think about that as the markets are doing what they're doing. And kind of lastly, just thinking about, the burden placed on a market still. And again, a lot of this is pretty seasonally normal. A lot of cash supplies forthcoming. To your point, Dan, the harvest will be expanding northward, I think pretty rapidly over the next 2 days. We're hearing of some harvest in Kentucky over the Labor Day weekend. That's the plan, at least. And so the markets have recovered, and that's been welcomed, but there's still a pretty heavy burden on, December corn 2025 specifically. So we have, checked off the first resistance level, about 406. Now you got 417, 430. Do you have the evidence you need to get above that? And I think that the burden will be pretty heavy. And then again, I think as spot soybean market, which is still September, 1040, 1050 resistance, I think still very much intact. So we've been making some moves this week, and I think that's important. It's always about, markets are going to move, ag markets are volatile. What do you do when you see even a modest change? And that's, I think, the big question we've got this week.
Well, good rundown, Ben. I really appreciate it. And I think you're right. The one thing we haven't talked about this morning yet is China, and still no evidence of them buying or even showing interest for U.S. soybeans or any other grains. And I think they're shot across the bow on the weekend in terms of saying that the trade war is protectionism and that they're against it. And I see them bidding down this morning down in Brazil for another 5 or 6 cargoes of Brazilian beans for November. I just think this is pushing it down the track. And ultimately, if you don't have Chinese demand, I don't care how bad weather is in the United States, it's a big deal in terms of missing 10 million tons of Chinese interest. So let's keep focused on that. I know we at Ag Resource have been on top of it. We'll stay on top of it, and we'll keep advising you what we see in terms of China and the United States going forward. Closing comments from you, Ben?
No, I think so. I just think very, very hard about needing to manage some risk this week. Again, it's kind of premature to say that the recovery starts and continues. We still have a lot of things to work through. And I think to your point, trade policy, U.S. production still look to be fairly heavy to me.
Yeah, I wish I could tell everybody like last year we're going to make a harvest low in August and rally to $5 by early 2026, but boy, that just doesn't seem to be in the cards right now. So unfortunately, a lot of the demand is already absorbed, or well, let's say the demand is known. Mexico's been the big buyer of corn recently, so it's not like we're seeing a new entity coming forward that's going to surprise all of us. Be well, everybody. Ben and Dan signing off. We'll wish you a very good Monday trading, and we'll be back tomorrow and discuss crop condition ratings and what the rest of the week looks like. Be well.